We are just a few weeks away from the Fed's next meeting, and our next guest says that he was puzzled by the central bank's 50 basis point cut because he thinks it contradicts everything they've previously said about their policy. Joining us right now is former Federal Reserve Board Governor Kevin Warsh. He's a distinguished visiting fellow at the Hoover Institution.
So distinguished. It's like hard to say it. Distinguished enough, yeah. Reeks of distinguishment.
He's wearing a tie.
I just arrived and the sniping has already begun. Becky, why don't you take
It's
control
not
over this?
I think
You shouldn't take
sincere.
things as sarcasm when they're not. Yeah, you should take them very distinguished.
We are very happy to have you here, Kevin.
Just call him chairman.
Why don't you just explain what you mean?
Chairman-elect.
Why don't you explain what you mean by saying this goes against what the Fed had been saying up to this point with their policy?
So they've had different theories, Becky, about causes of inflation, the measures they use, and people in financial markets and media have tried to follow those. They said for a long time, you'll recall a few years ago, they were for flexible average inflation targeting. So inflation, when it was at 1.7, they said we'll get it a little higher. We'll try to balance around 2. They seem to have gotten rid of that idea without replacing it, so they don't have a broad new strategy. Then they said for a long time what really matters is core PCE. That's what we should focus on. But it's now running at around 2.7%, nowhere near their 2% range. About a year ago, they said, well, the best measure of inflation is now what they created a new category, and they said it was core services ex housing. Well, that's in the 4s. Previously, Janet Yellen, and embedded in the Fed model, said what really matters is wages. And so we need wages to run at 3%, which is consistent with inflation running around 2. Wages are running around 4. So all of this isn't to say that all this is to say they don't seem to have a serious theory of inflation that's theoretical and empirical. It's not obvious that they acknowledge what their role is in prices. Instead, it has something to do with wars and pandemics. I think in a world this dangerous, in economic policy where fiscal policy is irresponsible, the central bank needs to be very clear about its reaction function, be clear about its goals, and not look like it's lurching. That's what put us in the mess we have.
I understand your point. I will say I can understand their perspective if they're saying, look, it was inflation. Inflation's been coming down. Now maybe we need to pay attention to our other mandate, which is the jobs market. However, the jobs numbers have been better than anticipated, too, over this time. I can understand moving around and saying there are things that are more important at different points in time. What do you think about the dissent that there was at the last meeting, and do you think there will be more at this meeting?
Yeah, so it's a fair point. So what you're really saying is they've claimed that they're data dependent.
Right.
And when times change, they should change. Well, of course that's right. I can't argue with that. The data, since early part of the summer, has gotten better. The economy's gotten stronger. The broad sense of the data is the economy's in better shape.
Stock market.
Well, the stock market is in better shape. So if that's all true, then maybe they're not data dependent. I do not want to be the person accusing them of politics. That is not the central bank I know. The members of the FOMC that I know, they don't play politics. But when you don't have a theory of the case and you don't follow it, it is easy to get that accusation, and it's harder for people like me to defend them.
So why do you... Oh, go.
Did you see Esther George yesterday? I've had a running argument with Steve Leisman about whether the Fed should push back on Congress about funding some of the oversized spending that we saw. Steve says they work at whatever the Congress does, they need to enable the Congress. That's what their job is. They work for Congress. Esther George said they definitely should push back. So I guess I'm asking, I don't think politics should influence the Fed, but can the Fed influence the politicians, or should they?
And how complicated is that when they're the ones who are given oversight for the Fed?
So let me try to get into that riddle. When they kept interest rates near zero for a decade and did quantitative easing, where the central bank are buying the bonds of the Treasury Department in crises, and they decided to make that more or less a permanent feature. It is the Fed that wandered into politics on a permanent basis. And in a period of free money, what was the clear sign to Congress? You can spend all the money you want, and so they did. You don't have to do much to get a bunch of members of the Congress to want to spend money. And they said, come at it, because it's free and it'll be free forever. Remember, secular stagnation and zero rates and zero lower bound. So they encouraged this spending boom. Over the course of the last few years, Congress, at a time of relatively full employment, added $5 trillion in deficits cumulatively, and has put the country in a much more dangerous place. This level of debt is dangerous for our economy, and it's a terrible sign to the world, because we're all talking about economics.
Kevin,
bad economic policy provokes our adversaries to take us on, so that makes the country less prosperous and less peaceful.
Have you seen the calculation that big banks have been almost given this windfall of profits because the Fed paid them to hold on to reserves rather than giving it out in loans, and as a result, they've gotten paid more than normal businesses would have been paid, and it just padded their profits. I saw a number like $1 trillion. Have you looked at that? Is that true?
So I have looked at it. It's shocking to believe that the banks would take advantage of an arbitrage.
And they did.
And they did. I don't blame the banks for taking advantage of the arbitrage. I blame the central bank for allowing the arbitrage to happen.
What was the rationale?
Why did they do it? Yeah, the rationale for that and the rationale for keeping rates at zero. If the Fed was wrong in doing these things and allowed Congress and the banks to take advantage of the situation, why were they doing it?
I think the reason why it happened is, in the old days, think about the Greenspan Fed, we had a Fed funds rate. That was the rate that mattered. It was the rate the central bank communicated, and it was the relevant rate for financial markets. There are a proliferation of rates now that the central bank hits. The interest on excess reserves rate, the Fed funds rate, and a host of others. There's a series of risk-free assets that are now competing with the Treasury. They come from Fannie and Freddie. They come from the home loan banks. They come from government guarantees of all sorts of things. The Fed now has many different rates that they're trying to juggle at the same time because they've moved from a relatively simple way to manage the central bank and the balance sheet to a very complicated one.
Is that a reflux and after effect of what happened in the Great Recession and the financial crisis and the extraordinary moves that were taken to try and normalize and stabilize things?
I think it comes from two things. It's one, the central bank playing a much more permanent role in the financial markets and wanting to, not just in crisis times where I have some sympathy, but for all seasons and all reasons. And it also comes from the fact that they have a framework that is unanchored, that they are pursuing different objectives that are often at cross purposes. One simple example, they're now seeming to loosen the policy rate to provide more accommodation. At the same time, what are they doing with the balance sheet? They're still in some modest quantitative tightening, which is tightening financial conditions.
Right. It's like having a foot on the brake and the gas at the same time.
Working at cross purposes,
So
and the rest of the world is watching.